Hey, and welcome to Checklist Day. Today, we are talking about things for you to consider during a recession or a market downturn. This is Dee Dee Jones with Innovative Financial, joining you as always live Mondays, Wednesdays, and Fridays. Today, we're going to go through a checklist together, and I'm going to add a link to this checklist, and you can download it for your own purposes after we're done. But we want to cover some bases on when things are feeling uneasy or it's a recession. What's a recession? A recession is when the economy is slowing down. And if you're the one that lost a job, you might even call it a depression. So that's not the textbook definition, but that's the feeling of it, the reality of it. So, and is the market down? Well, that depends on what your investments are doing. Different people have different experiences there. So we're going to start with different categories of tasks to think about. We've talked a little bit about some of these, but this is kind of a way to bring it all together and do it in a comprehensive, like I say, checklist. There'll be one ready for you when we're done here. First, we're going to start with cash flow. If cash flow is getting tight, what are things that you can do? We can look at areas to reduce spending. We've talked about being mindful about how you spend your money. And if you're anticipating shortfalls, where are the sources of money that you might be able to use to fund those shortfalls, or are there ways to negotiate abatement on where those shortfalls might be cropping up? Revisiting your priorities, your spending priorities might be able to help. And there's some other checklists we'll go through later to fill in that gap. This is a great time to talk about your emergency fund. We devoted an entire session on that. How much do you need to have there? Where do you keep it? Just double check you know what you have, where you have it, and how you might need to use it. Could be that you've already dipped into it, and that's what it's there for. Maybe your employment has been disruptive. Are you still working? If you've been laid off through no fault of your own, you might be eligible for unemployment. I know that the phone lines and getting filed set up have been challenging, to say the least, but that resource is there for you. If you're one of the people who might have been considering retiring in the near future, revisit your plans. Make sure you're still comfortable with that. Could be that you can retire a little bit early, less stress. Might be that you continue to work for a few years because perhaps your investments have taken a hit, but it's a really great time to revisit your plans around that. If you're in a situation where you're taking ongoing distributions from your investments and the investment market is down, one strategy is to consider maybe changing the timing of those investments rather than having them come out ratably through the year. Save them toward the end of the year, hoping that the market will be better. Do I know that the market will be better? No. As I say all the time, I don't even know what's for lunch. I have no idea what the market will do. We just plan for probabilities. The next area we can talk about are assets and debt issues. Do you have a mortgage or debts? If you're in the right situation, it might be time to refinance your mortgage. And by the way, this Friday, we're having a mortgage specialist on for a special interview to learn about what's happening in the mortgage market and how you might be able to take advantage of that. So in your investments, this can be a great opportunity to rebalance your investments to, like if you're playing poker, take the winners, pull some of those chips off the table and invest in some of the more lagging categories in anticipation of them coming up later. So it keeps your portfolio in balance, both from a distribution standpoint, an allocation standpoint, and a risk standpoint. This also might be an opportunity to, if you've got some lower basis holdings, time to sell them and minimize the tax impact. What do I mean by that? So if I've got something that I bought and it grew, but it's pulled back a bit. So if I sold it when it was here, I have tax on this entire gap. It's pulled back, still not necessarily a bad investment, but the tax burden could possibly be smaller, especially perhaps if your income is lower. This might be a great time to harvest gains. I know we don't usually talk about harvesting gains, but this might be an opportunity for you to think about that. But always keep in mind, Whatever changes you're making in your investments, you need to consider how they work now, but also how they influence your portfolio into the future. And if by chance you're sitting on extra cash that isn't earmarked for near-term expenses, this might be an opportunity to invest and take advantage of lower valuations. But remember, that's got to be money that can sit there for the long term. If you're typically making contributions to IRAs, Roth IRAs, continue to do so. Investing now is taking advantage of dollar cost averaging, which means you're buying regularly at whatever the market has, and right now, probably lower valuations. Now, if you are a small business owner, you may be eligible for relief both through the federal sources or even state and local sources. So definitely look into what options exist for you. Our next category here is tax planning, one of my favorites, near and dear to my heart. So if you've got a traditional IRA or 401k money that you can do this with, it might be a good time to consider a Roth conversion. That means taking the money out of the IRA or the 401k, moving it into a Roth. That's going to show up on your tax return as taxable income. I know we hate that, but the valuation is down. So that same 100 shares of XYZ a year ago was worth this much. Now it's only worth this much. So as we move it, we only pay tax on that much, goes into that Roth bucket, and it can grow. And over time, if it came down, hopefully it will have better growth opportunity. And the rest of your life might actually have lower income. And so the tax hit won't be as big as it might be in other times and other situations. The other thing to look at is, you have any investments that have a loss. This might be a year to harvest those losses and manage down your tax burden. And then finally, long-term planning issues. If you're in a situation where you might be subject to estate planning, and not very many of us are, but if you're one of those, there are opportunities because of low valuations and very, very low interest rates that you should consider. If you're doing annual gifting, this is a strategy I would recommend you continue with if you're potentially subject to estate taxes and aren't already doing it. It's important that you get that going if you've got any assets that you want to get to heirs without those monies or the assets being subject to estate taxes. If you want to learn more, as always, let us know. If you're in the enviable position of being able to help out family members in need, there's actually a family loan provision that you can do. And with the very, very low interest rates that we have right now, it can be beneficial both for you as a lender and for them as the borrower. And finally, it's really, really an awesome time to consider updating your estate plan. I know I've mentioned this before, and it probably sounds like I'm harping, but really, 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 it's time to do that. We can look at the change in the value of the assets. It might be a situation of changing how those assets flow to your beneficiaries. Understanding and making sure that you have the non-probate assets, the IRAs, the 401ks, insurance policies, things that pass by designation. Double check that you have those set up exactly the way that you want them. As well as the probate items are passing in ways that you intend to. Great time to reach out to estate planners. I've talked with a couple. They are so busy right now, but because of the online abilities, it's really continues to be one of the easiest times to get your estate planning done. I encourage you over and over to revisit that, get it done if you haven't. There's a lot more documents than a will that come when you do estate planning. Those important things include powers of attorney. If someone should fall ill, having those powers of attorney already in place can really, really be helpful. So that's our checklist for today. Remember, I'm going to post a link to this down below. As always, follow us, click on the bell to get reminded of future topics. Upcoming this Friday, we'll be talking with a mortgage specialist so you can learn about what's happening in the world of mortgages and if refinancing will be a good option for you. This is Dee Dee Jones with Innovative Financial. Thank you for joining us. We'll see you on Wednesday.